Hello everyone, in this video we're going to be doing a balance sheet practice problem. This is a pretty comprehensive practice problem, so most of the things that you would be required to know, not every single thing obviously because that'd be hard to encompass in one problem, but most of the things that you would need to know, if you could do something like this, you should feel pretty good for the exam, okay? So the first thing is that XYZ company is a retailing concern that sells everything under the sun. XYZ has the following data available for the year end December 31 related to its operations. And then we're just given a bunch of information, right? We're given a bunch of amounts, a bunch of items, and a bunch of amounts, okay? And so our job is to take all of these items and amounts and basically just make a balance sheet, okay? We're gonna see in a minute, that's what we're gonna do, okay? But additionally, before we get to all these numbers, we'll go through them in just a minute, but let's read the rest of this. Additionally, XYZ had 1 million shares of common stock outstanding for half of 2018, and then on July 1st of 2018, the company reacquired 500,000 shares for $75,000, okay? So that is what we call treasury stock, okay? So this will be treasury stock. When the company goes out and buys its own shares, we can actually see right here it says treasury stock $75,000. We'll get to that in a minute. But when the company actually reacquires its shares, it's called treasury stock. Okay. Then the company authorized a total of 5 million shares in the articles of incorporation. Okay, so these are our authorized shares. Okay, so as of right now, we could determine what is our outstanding, authorized, and issued shares. Okay, so our issued shares would be 1 million because that would be the total amount that's ever been issued by the firm. Okay, our authorized shares are 5 million, and then our outstanding shares would be the 1 million that were outstanding until July 1st minus the ones that were purchased, which were 500,000. So that means we would have 500,000 outstanding as of year end. Okay, and we're going to need that information when we prepare our balance sheet, so we might as well just go ahead and get that prep now, and so that way we can be like, when we're actually making the balance sheet, it goes a little faster. Okay, now what we want to do is we want to basically just go through all these items and say, first of all, is it an asset or liability or equity? Those are our three options. But then on top of that, let's go one step further and let's put the subsection. Is it a current asset? Is it a current liability? Is it a long-term investment? Whatever it might be. So that way when we make our balance sheet, it's very quick and easy for us to be like, oh, okay, this goes in this section, this goes in that section, right? So first, cash, that's an asset and it's a current asset, right? Always a current asset for cash. Building is an asset that goes under property, plant, and equipment. Then we have equipment, same thing, is PP&E. Trading securities are an asset. They're always considered a current asset. They are a type of investment, but they're always considered to be a current asset, okay? We talked about that in a previous video. But that they're always considered to be a current asset. Inventory is an asset. It's a current asset. A patent is an asset. It's an intangible asset. Okay. Goodwill, again, is an asset and it is also an intangible asset. Prepaid expenses are an asset. They're a current asset generally. Land held for sale is an asset, and that is known as a long-term investment. That's the subcategory. Then we have land, just regular land. That's PP&E. That's an asset. Accounts receivable is also an asset. That would be under the current asset section. Accounts payable is a liability, goes under the current liability section. Allowance for doubtful accounts goes under the asset section, under the current asset section. Technically, if we're going to be completely, technical here, ADA, allowance for doubtful accounts, is technically called a contra asset, but it goes under the assets section, right? And that's kind of what we're after right now. Bonds payable is a long-term liability. It's a liability. Cash surrender value of a life insurance policy is an asset. It is an investment. It's a long-term investment. Okay. Building, accumulated depreciation on the building and the equipment are both contra assets, so they go in the asset section. They both go under PP&E more specifically. And then unearned revenue is a liability. It is a current liability. Common stock is an equity. It doesn't have a subcategory. APIC, or paid in capital in excess of par, whichever one you want to call it. Additional paid in capital or paid in capital in excess of par is an equity. No subcategory again. Retained earnings is an equity, no subcategory. Treasury stock is technically called a contra equity. It reduces our equity, but either way, it goes under the equity section. Okay, so now we have done all the work that we need to do beyond actually preparing the balance sheet. Our job's a lot easier now, right? Because all we have to do is make the balance sheet itself. We've already classified everything, and that's half the battle. Okay, so let's just get everything together on the same page here and make sure that we have it all together here, so that way we can see all the information at once. Okay, so we're just going to move this over just a little bit, try to sneak everything in there. Okay, it's a little bit tight, but it's just about as good as we can do. Okay, so at the top here, we have the 3-part heading, which again is going to be the name of the company, the name of the statement, and then the date. Then we always start off with the assets. We just write straight up assets across the middle. Then we do current assets as our subcategory. And again, remember, when we're in the current asset section, these need to be listed in the specific order that they're listed here, right? If we do not list them in the proper order, like we talked about in one of the previous videos for the balance sheet, I would definitely go back and look at that if you haven't yet. You need to make sure the current assets are in a specific order. The rest of the sections, long-term investments, PP&E, everything else, does not matter the order specifically, but the current assets do. And if you do not have them in the right order, the TA or the professor will take off points. Okay. So under current assets, we have cash, right? We know we have cash of $50,000. Then we had trading securities of $4,500, so those would go there. Those go next. Those are second. Okay. And again, when I say first, second, third, fourth, fifth, okay, there's 5 categories of current assets. When I say, a certain order, like third or second, that's assuming when we're listing them out here, that's assuming we have every single one of these 5 categories, right? If, for instance, we didn't have trading securities, but we had accounts receivable and we had cash, well, cash should be listed first, then accounts receivable will be listed second, technically, in that situation. However, here we actually have all the different categories to illustrate the most complex scenario. But again, on an exam, if one of these categories isn't there, well, then that means you just list the next category, right? Okay, so if we have 1 and then we have 3 for accounts receivable, well, then that technically ends up being 1 and 2, right? Okay. Accounts receivable was $30,000. It told us that in the facts right here. Allowance for doubtful accounts is $2,000, and that would go right there. Then we would total it over. And again, just as a formatting thing, if you have 2 items that total up into 1, you want to make sure you kind of do this separate column here and then total it up in the final column. Okay. Next, we have inventory, which was $6,000. It was given to us right there. Prepaid expenses were given to us at $10,000. We find those right there, okay? And again, remember, the ordering is important. We want to make sure we indent a little bit under the subsections, and then if we have like a less thing, which is subtracting, we want to indent that a little further. Then we want to total everything up, and we want to make sure for every section we're totaling stuff up, okay? So that way at the end, it's easy to add everything up, okay? And also, that's just the right way to do it within GAAP. We want to make sure we have our totals, okay? Then the next section is long-term investments. We had land held for sale and the cash surrender value of a life insurance policy. The land held for sale was $100,000. The cash surrender value of the life insurance policy right there, $5,000. Total those up for total long-term investments, $105,000. Okay. Then we had our PP&E. Our building was $500,000. Our equipment was $100,000. Then we had the associated accumulated depreciation accounts right here, $50,000 for building, $30,000 for equipment. If we total those across, we'll get $450,000 and $70,000. Again, we're putting a separate column here, and we're kind of indenting and then indenting a little more. Then we have land, which was $250,000. That was told to us in the facts. Okay, and then we just total up again our PP&E. Okay, then we have one more section for this specific balance sheet. We have intangible assets. Okay, if we had other assets, we would have a next section with other assets. However, in this balance sheet, we don't have anything that's really out of the ordinary, so we don't have an other assets category. So then we noted that we had the patent and the goodwill. And the intangibles, we total those up, we get $5,000. And then the last thing to do for the assets is total up all the assets. So if we add 95.8, 105,000, 770, and then 5,000, all those together is 978.5. And that's the other reason why to total up, right? Because then when you're going to actually do this total assets, it's very easy. You just say, okay, where are my total lines, right? And you just do that, okay? Next, we write out liabilities and stockholders' equity to differentiate that we're moving over to the other side of the balance sheet, right? Outside of assets, there's liabilities, stockholders' equity. We differentiate between current and long-term. Under current, we have accounts payable, and then we have unearned revenue of $4,500 and $7,000. $4,500 is there. $7,000 is there. We total up our current liabilities. Then we just have one long-term debt, which was a bonds payable. It's given to us right there. We had $150,000 there. Sorry about the formatting, got a little bit cut off, but the total liabilities is $161.5 because that would be $11,500 plus $150,000 for bonds payable. The reason I did not total up the bonds payable for long-term liabilities is because you technically don't need to if you only have one item in that category. Okay, so within a specific subcategory, if you just have like one item, you don't necessarily need to total it up. Okay, you can, but it's not completely necessary. Okay, finally, under stockholders' equity, we want to differentiate we're there. Okay, again, we want to have common stock, then we want to list out the par value, the number of shares authorized, the number of shares issued, and the number of shares outstanding. We need to list out every single one of those items, which we did at the beginning, right? 100,000 outstanding, 500,000 authorized, and then 500,000 outstanding, 5 million authorized. Excuse me if I said the wrong number. And then the par value, okay, how did we solve for the par value? Well, the way that it wasn't given to us, so we actually had to solve for that, right? And the way that we did that was we said there's $100,000 in this common stock account, okay? And we've issued 1 million shares, okay? So if we've gotten $100,000 and we've issued 1 million shares, that means that the par value per share is 10 cents per share, okay? And you might need to know how to do that. So basically what you want to do is that you want to say basically the dollar amount in the common stock account divided by number of shares issued, okay? And that's going to get you to the par value of the shares if it's not given. APIC was just straight up given to us. It was $700,000, okay? Then we total this across to get to 800. Retained earnings, we have to solve for. We'll do that in just 1 second. Treasury stock was given as $75,000, okay, contra equity. And then we have total stockholders' equity, and then we have total stockholders' equity and liabilities. And stockholders' equity is $978.5, which equals our total assets of $978.5. So we know we've done this correctly. Now, the last little piece that we have to do is solve for retained earnings because we're given a question mark. The way to do that is that you get the total assets of $978.5, and then you subtract away all liabilities and stockholders' equity except retained earnings. And if you do that mathematical computation, I'm not going to walk through it just because it's a relatively easy mathematical computation. You get $92,000 for retained earnings, okay? And it's relatively tedious to do, but if you were to do it, you would get $92,000. That's where you get retained earnings from, okay? And that you may need to know as well for an exam, okay? So I hope that helped, and that's the end of this topic.